Hello, everyone. Joshua Hayes at BigWaveTrading.com giving you a weekend update on where we stand in the overall market, where I stand with my personal positioning, and what I'm recommending going forward. All right, guys. So, not a whole lot has changed. We had a rally attempt start on Monday. Should have known this weekend with peak pessimism. If you ever hear anybody you ever subscribe, watch, listen, or get analysis from that talks about a future upcoming emergency Fed meeting, get them out of your lives. Bad information. I can't believe that I've even seen market professionals of 5, 10, 20 years talk about that emergency Fed meeting. Guys, it happens 8 times every single year. It's not an emergency. It's called expedited. Don't believe anyone ever again whenever you hear emergency Fed meeting, especially whenever it's done by the Board of Governors and not by the actual Fed heads. I mean, it's just amazing what I saw out there. But peak pessimism. I also saw that everybody was so bearish. Credit Suisse, what is it, going to zero? Well, what did it do this week while the market sold off? Up 20%. Guys, don't fall for these narratives, either bearish or bullish. Let price be your guide. The number one rule of big wave trading forever and always will be to always cut your losses. This does not apply to long-term portfolios. If you know the management, the companies, the stock, if you know this company inside out, then you're like me. And during this week, while you haven't loaded into your long-term portfolios, there's a couple of stocks this past week that, following bad news, they got down to levels that I deem are cheap. And I bought a little bit in my long-term portfolio, knowing in 5 to 20 years, they are not only going to be higher, they're going to be much higher than where they are today. Why? They always are. Great companies, great leadership, great management, great fundamentals, great technicals. They always are higher. So I'm not afraid to buy stocks here for the long-term portfolios going forward and taking losses because it's a 5 to 20 year time horizon. Now, let's say you buy something like Robinhood, okay? And it's holding up very well. Well, let me tell you this. If Robinhood ever takes out its June lows, you probably shouldn't still be long Robinhood. So let's say that this was in your long-term account and you wanted to get rid of weak names. Whatever isn't holding the June lows right now, if you're not 100% certain that in the long term you've got a winner, I'm thinking of Robinhood and Coinbase, stocks like that. Just put a stop below the lows, and if it fails these lows, get out. Just admit you're wrong, take the money, and put it into real quality companies. You know, Apple, Tesla, Microsoft, Nvidia, stocks like that. So, with all that being said, the good news is, during this rally attempt, when we all thought the Fed was going to pivot, well, market participants, based on price action, the Fed didn't actually pivot. We didn't have a capitulation bottom. Never FOMO'd into the long-term accounts. Following Jackson Hole, everything changed. Following a bad CPI, GDP, FedEx, Nike, and now bad jobs report, we're back to looking extremely weak. I would think that these lows are definitely in trouble. There is no reason to be bullish, but on the short term, you can see we got a slingshot developing. We're green on the TSV and MACD. This is nothing to guarantee a bounce, but my point is, guys, the bearish narrative, when it gets as dire as it is, tactical sentiment just expects a market bounce. How you know things are really bad is whenever you get this kind of bearish sentiment and you just keep on melting down. If that's the case, not good. And on that note, I want to take some bigger picture looks just really quick. Monthly, I've said over and over and over that I believe that, boy, this chart doesn't really show it that well. Let's squeeze this up. Okay, there we go. I've been saying over and over and over that I believe that we're in a cyclical bear market in a secular bull market. I am always under that impression until we trade below. It's not here on this one. Oh, it's because it's the monthly. Weekly. Let's do the weekly. I'm always under that camp until you get below the 200 SMA on the weekly, fail it, and then that's it. You get below these lows, now you're in a secular bear. You get below the 200, you fail it. You get below these lows, secular bear. We're getting there on the SPY. I want to show everybody on the DIA. we're below the 200 weekly SMA on the DIA. We're there on the QQQ, but we're not being confirmed yet in the, well, IWM we're being confirmed, but we're not being confirmed yet on the SPY. That's the next hammer to drop if you get below the 200 weekly SMA and can't get back above it. That being said, nothing has changed regarding long-term plans. On the way down, as long as the Fed is under a QT cycle, I know in 5 to 20 years the market will be higher. Unless you really think that this is 1929, which I do not, because the Fed did not even exist then to implement QE, which will be implemented again. You're already seeing it come out of Bank of England. You're already seeing it coming out of Australia. So you're already seeing the first signs. Bond buying program, not hiking rates as much. The United Nations is asking all countries to stop hiking rates. You're starting to see potential pivot moments. Now, does it mean we're going to rip right back to new highs? Absolutely not. As long as QT is in the United States, as long as the Fed is not buying assets on their balance sheet, it's going to probably be choppy. I expect it to be choppy. 2022, I said 2022 would be the year the active trader, i.e. people that day trade. Guess where my day trade accounts are following Friday's close? And I day traded Lucy intraday. All-time highs, near all-time highs. Look at where the market is. You think that's a coincidence? So what I'm already early on calling 2023 is the year of the recession. I expect 2023 to be the year that we actually enter a quote, real recession. I expect the market to be extremely volatile, making the same kind of moves that we're seeing in 2022. The only difference is, boy, I'm putting my neck out there, guys. How many people do this? But guess what? I won't just blindly buy based off of my game plan. I have a game plan, a contingency to that game plan, and another contingency, and a contingency, and a contingency. But I believe 2023 is ultimately going to be a year where if we still see QT, we still see the Fed not pivoting, we just go nowhere. We 20% up, 20% down, 20% up, 20% down. Wild, 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 ultimately going nowhere. But on the way down, as long as the Fed doesn't pivot and or, more importantly, I don't get capitulation, is the VIX above 40. I have said over and over and over since the beginning of this year, I am not going to call a bottom via capitulation or sentiment until the VIX is over 40. Not only do I need to see the VIX over 40, I need to see that equity put call ratio over 1, sustain itself over 1, and or get to 1.2 minimum with the VIX at 40, a hammer candle reversal on the SPY. What would that look like? Just think of a day like this, or a day like this, or a day like this, or a day like this. You're looking for these kind of hammer candles on the way down with the VIX over 40, put call over 1.2. Then we can start talking about a real bottom. However, what I'm doing moving forward, my game plan is SPY. We get below 350, we close below 350, 50% of the remaining cash that I raised before 2022 started, when I sold half of all my long-term portfolio accounts, including 100% of one of my wife's accounts, that cash is going into all of my long-term favorites. 50% of it, not all, 50% of it is going into all of my long-term favorites at 350. Then what is the next game plan? SPY 350, we keep melting lower. SPY 320, I put a little bit more to work. SPY 300, I put a little bit more to work. SPY 280, I put a little bit more to work. And if you actually think the SPY is going to do a 2008 move, which is, I can't even pull this up. That is so amazing how long ago it was. If you think SPY is going to put a 2008 move, that means that you think it's going to lose about 55% off the high. The damn Fibonacci level is going to be in my way, so I really can't do it. But if you do that, the worst that it's going to get on the downside is going to be around SPY 200. I don't think we'll even remotely get close to there. If we get to SPY 250 in my long-term portfolio that I post in my Discord chat room for members, I will be all in on the way down. The only other way to get me all in the long-term portfolios, capitulation bottom via the VIX put call ratio. Hopefully you see some equity outflows. We're starting to see them. I would love to see that pick up. Hopefully see some bullish sweeper activity and new names. That would be great. And that hammer candle for a capitulation bottom. So that's what I'm looking for on the way down, and or Fed pivot or capitulation bottom. If all of a sudden Fed quits hiking rates. They cut rates. That's it. All in the long-term portfolio. So that's covered. What are we doing in the quarterly portfolios? Quarterly portfolios have been all cash since February. 100% cash. They continue to be 100% cash. I do plan on going all in Q4 with the long-term leaders in that portfolio and the best names of the best names, relative strength-wise, top industry groups. Got to diversify it. But I still plan on doing the 100% all in as long as we're not crashing. If we're crashing into November 19th, then we wait till we actually get a floor in the market. Then I'm going to go all in. But I'm going to go from 0% invested in the quarterly portfolios to 100% invested from 11/19 to 2/19. And then I'll go ahead, take a step back, reevaluate the situation, and see where we go from there. So that's what I'm doing on the quarterly side. What I'm doing on the end of day swing trading side, I am 99% cash. I still have small positions in stocks that are still trending higher, made a couple of recent buys that haven't failed yet, but piker-sized trades, piker-sized positions in a piker market. Simple as that. End of day swing side, 99% cash. How about my can slim positioning trades, that portfolio, if you will say it like that? 100% cash. How about my can slim swing trades? I'll show you. I've only got one name, FSLR. I got long FSLR off the 21 EMA. It broke out, but look at this, an immediate reversal. And look at this, 1, 2, 3 days down in a row, strong volume on 2 of the 3 days, momentum is switched to negative. Guys, if FSLR, which is just a few cents away, trades below 127.07, guess what? I'm out, and I'm out with a small loss, just the way it's supposed to be. And once again, is 100% of my portfolio in this name? No. Is 20% of my portfolio in this name? No. Is 5% of my can slim swing portfolio in this name? No. Why? The overall market. So we're all cash on the quarterly, have been since February, have basically, on our swing portfolios, we got some great signals. So remember, get a great signal. I go from 0% invested to like 50% invested with one signal. But ever since that Jackson Hole day, our swing portfolios has slowly drifted. And right about here, it got to 90%. Here it's been at 99% ever since. Cash quarterly, cash canceling positions, cash canceling trades, cash Josh Hayes swing trade signal portfolio. Cash, 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 cash. Long-term portfolio still plan on getting to work. Not looking or calling for a bottom anytime soon as long as the Fed is aggressive. And that jobs number that came out Friday was not good. And speaking of not good, we'll end the market analysis with this. Look at these circles at the bottom. This is the monthly time frame of the SPY. The worst periods in the market come when the market is below the weekly 200 SMA. The weekly 200 SMA also has a weekly PPO below 0. You get a weekly PPO in the SPY below 0. You get the SPY below the weekly 200 SMA. You combine that with the monthly MACD and TSV being lined up in the negative. It takes a really bad market to get the monthly CMF red. I mean, you got it here. And you got it here just for a short while at the 2008 bottom. So I'm not going to really rely on that indicator to flip red. But when you get double red, especially with the negative TTM trend momentum on the monthly time frame, you get the SPY below the weekly 200 SMA, and you're below the 0 on the PPO, you're probably in for a very long downtrend. So keep this in mind. This is not a good look on the monthly. We've gone red on the TTM trend momentum. We have not gone red since 2008. And before that, the last time we were red was 2002. So it's a rare occurrence. Not only are we red, we're double red here. Not only are we red, we're double red there. Not only are we red here, we're double red here. So, like I said, doesn't this match up with my 2023 narrative? If this turns out to happen, guess who's going to know when we bottom? Guess who's going to be buying the shit out of, like I'm all in on the next round of canceling position trades that set up after we bottom. All in after the next round of canceling swing trades at bottom. I get some great signals similar to what I would consider a great signal would be GRBK on the daily time frame right here, right before it made this 27% move. All in. I'm not even going to hesitate. And speaking of that, I want to let you guys know that since I started to give new swing trade ideas before the market completely rolled over, every single one has been profitable before failing. The first one I gave everyone, I believe, was CEIX. I believe, I'm not sure, was right here. This one moved 25% plus from the long signal. I then gave ARHS here. ARHS moved 20% following the long signal. I then believe I gave everyone GRIN. I can't remember where GRIN, let's say it was here. It didn't work out right, but it did produce gains and is still holding up like a champ. Look at it beasting. Pretty good. I'm already out. I got out on this candle here. Just get me out. I don't want to deal with this market. But look at it. Still showing strength. CEIX, still showing strength. ARHS, not so much, but it isn't getting killed like the rest of the market. Then there was ADT. ADT, it initially worked on day one, but then it did fail. Still, following the signal, at least it worked a little bit. I've told my members recently that if you get long something and it pushes green, once you have a few percentage points of gains, feel free to go ahead and bring your stop to break even. You're going to probably churn a lot, but it's going to save your account capital for that moment when we do go heavily long. But ADT failed. I got out of it whenever it got below whenever this is the signal date, breaks out, breakout day, low a day, final stop. I think on another account I had a position as a final stop here, and then I got knocked out here on this open being drive for a small loss. But GRIN small loss, ADT small loss, ARH, CEIX good wins. HUM got a new signal here. This thing, though, gapped up. Technically, you don't get long until it triggers. You get a reversal hammer candle, and then you get long on a reversal trigger to the upside. So HUM, I let fill on the way down, and following this reversal candle, put half of my stops right here, got knocked out, basically small, tiny losses. And then following this candle, that was it. I put my final stop right there. I got knocked out. So HUM failed. The final long that I've given everybody, DGII, think about how bad the market's been. DGII has given you a 10% plus gain. I've told everybody, not only might you want to think about moving your full stop to break even after just a couple of percentage points of gains, I really recommend half at break even, half logical, rational stop levels. But once you get a 5% or 10% gain, you got to start taking profits. So once this thing is up 5% from the trigger price, you got to start taking profits. In this market, especially. Not in all markets, this market especially. Once it's up 10%, you got to take profits. And now, if you're still long, you've got to have half of your stop at break even, no matter what. And then, of course, you can use the rational levels all the way down. I was initially using this low, but since the stock is now working, I use the most recent support low as the final stop. So, do I have any new long signals for next weekend? I sure do not, but I have a stock that I like a lot that I will continue to watch for a potential entry. DEN. DEN, I love this chart. Oil and gas stocks are the only hot industry group. DEN has a 99 EPS rating, 97 relative strength rating, which relative strength line's hitting new high, 96 group relative strength, an A SMR rating, an A accumulation distribution rating, an A timeliness rating, a B sponsorship rating, for a grand total composite rating of 99 with some massive EPS and sales growth currently and expected in the future. You give me a pullback to DEN, to the 21 EMA, you give me a reversal candle, any kind of reversal candle off the 21 EMA like this, or like this here off the 200, and I get long, and whatever the low is off that reversal, so let's say this happens off the 21 EMA. This candle happens off the 21 EMA. There's my stop. Let's say this happens off the 21 EMA. There's my stop. But I love DEN. We're green, green, green. Positive trend momentum on the daily. Weekly, green, green, green. Monthly, we're green, even though this isn't going to register a color since it hasn't ever changed on this charting platform. But we're completely lined up. So that's my idea. Not up here, not after this V ramp, especially since I started watching here. And I have other oil names that I like right now. DVN, FANG, SLB, OVV, XOM, OXY. I really like this group. All right, everybody. Guys, my video counts, they're not going anywhere. They're actually going down. What is happening? I believe that I give extremely great free coaching every weekend. Show me some love, guys. Share it. Promote it. Comment. Talk to me, guys. I want to help this YouTube channel grow so I can help as many people as possible before I die. So, show me some love. You know what to do. If you want to join me on this journey, I have links below in the description. Very, 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 very low nominal cost to join the big way trading family, especially on an annual plan compared to what I see out there. I got a wonderful deal in the email, by the way, this past weekend to join a lifetime service for the grand low price of $25K. Guys, if you want to join my lifetime service, and I promise you I'm going to be around at least 20 years, and then if anything happens to me physically, just via getting old, 20 years is probably all I got, but the goal is another 40 years minimum. You could always join me in lifetime for $2K. Won't be $25K. You know what I mean? But I'm going to be around for at least 40 years. You're going to see these weekend videos for at least until I finally, out of depression, stop making them because you guys aren't showing me enough love. Either way, great luck during the upcoming week. If you have any questions, please feel free to reach out. I have all my socials below in the description. Talk to me. Let's talk. I love you all.